Hey everybody, quick question for you. Do you buy small company stocks? If you don't, you should at least consider it. Let me explain why. So, you've probably heard of the Dow Jones or the S&P 500. These are both stock indexes or baskets of stocks. They're meant to track the largest US companies. Now, you're going to be familiar with a ton of these names: Amazon, Apple, Google, Walmart, Chase, and a bunch more that you'd be familiar with. But have you ever heard of the Russell 2000? This again is a stock index or a basket of stocks, but it's meant to track 2,000 smaller public companies. Now, these are still pretty big companies, but they're just not as gigantic as those in the S&P 500 or the Dow Jones. Now, let me show you a chart as to why I think you should at least consider putting some of your money in the Russell 2000 or in small company stocks. I'm going to focus on just the top two lines of this chart. This shows what $1 invested back in 1926, what it would have grown to today. So if you put $1 in the large cap index, you would have more than $10,000 today, even living through the Great Depression you can see there in the 30s. That's some really good growth. This is why we buy stocks, to get this kind of compound growth. But if you put $1 in the small cap index, you would have more than 3 times as much, more than 32,000. So this is why you should at least consider putting some of your portfolio into small cap. I'm not saying you should put every dollar into the small cap stocks because the swings in value are much greater. It's harder to live with the ups and downs of the small cap when you compare it to large cap stocks. Let me know what questions you have or if you don't know how to implement this in your portfolio. Thanks.